Let's do the nightly MeBob review for Wednesday, March 12th, 2025. As always, if you trust your edge and your method, and if you trade only the setups it gives you, and if you follow the rules, if you are patient, and if you think in terms of weeks, months, never today or even tomorrow, then you will make a lot of money and live a life very few can afford. And today certainly was a day to teach us that. So I didn't put in the plus 10, so but this was a win, 10 points short. This was also a 10 point short. I did not take it. I hesitated. I never really clearly thought this through. You know, what happens when you have a trade that is entered in profit target, hits the same candle, the next candle attempts to cross MeBob and fails to close above, or rather closes below the MeBob low. What do? Well, now we know. The answer is take the trade. So this a plus 10 and a plus 10, and then pretty strong sell-off, and then just as strong. Look at all these green candles, green. As Al Brooks says, first, when you have a strong move, the first reversal attempt is likely to be bought. We had an IOI breakout mode. We're going to talk more about that in a little bit here. We had another IOI earlier. And that it was bound to happen. This bar closed above, would have bought at approximately 18 and a quarter. I think that's where I did get filled. I recorded 4 of these, and I had to stop before this one got stopped out. But basically, you know, you're looking at, let's see, the MeBob range was about 11 and a quarter points, and each of these losses was actually, I would say, somewhere between 12 and maybe even, what is this, 17 points. Big losses on some of them, but the arrow is under the candle where you would have bought. So the previous candle, so this candle closed below. Okay, so I messed that up. So this is the candle that closed below, so you would have bought it when this one opened. This is the candle that closed below, you would have bought when this one opened. This is the candle that closed above, you would have bought when this one opened. This one got to 8 points of profit and then reversed. I had moved my stop loss to here, and I really suggest you watch the video I posted. Let's see if I can find the post number at Forex Factory. It's my most recent post as of this minute. And here we are. So it's called Live Losses, the Limitations of MeBob, and it is post number 165 in the Forex Factory Price Bob thread. So the reason it's important is because as this was going on, I was pointing out we had 1 push up, 2 pushes up, explaining we were very likely looking at a wedge top. If it were a wedge top, we'd want to get short. If we had a red bear bar closing at or near its low, so this would have been your sell signal. You could have sold at the market when this bar closed. If you're more conservative and cautious, you could have waited, put a sell stop below the low. Profit target would have been the low of this candle here. They could have gunned for this one, but it's obvious in hindsight they were gunning for just this one. And again, this was all live, real time. I made the comments that before this bar even opened, that we were probably looking at a wedge, or at least possibly looking at a wedge. that it would sell off and it would target this low, possibly this low. Ultimately, the market did target this low, but it was later. So this made it to +8, ended up -2. This one closed below, so you'd have gotten filled at 3. You would have gotten stopped out at 17.75, so 14 and change. Basically, then this candle closed above. You would have bought when this one opened. And again, I was mentioning, I believe that this is really one of these dojis where you really want to be short. When this closes, you want to sell. Profit target is the low of that candle itself. I stayed in because my commitment this week is to commit to the MeBob. But price action certainly gave plenty of clues and opportunity. I can tell you, for example, I'm going to do it after I'm done here. So I'm going to remove the MeBob shading just to show you what I'm talking about. So anyhow, this here was a long. This one did go to the profit target. Ironically, this is one of those where I would have thought it was more likely to sell down first, test the low. It's one of those sort of dojis. But, after 4 losing MeBob trades in a row, it was a profit, followed by yet another loss. You would have sold down here. This is very similar to yesterday. There's no way I would have sold this when close. I would not have entered a market order. At this point, we had a nested wedge. I had this line already drawn, and if you go to that video, the line may have only been extended to here, but I can assure you I extended it down here before this happened. Same thing up here. Always extend these lines, and I play with them. So this line was drawn like this, but once I had a tail, I brought this down, because here's the thing. If you're a student of Al Brooks, you will know that most of the time, most of these wedges, one of the 3 touches is actually going to overshoot that wedge trend line. Typically it won't be the first, it'll either be the second or the third push is going to exceed the wedge trend line. But be that as it may, this was an entry. I would not have taken it, but it would have been a loss nonetheless. And then finally we get one more, and starting to really see these. Again, I would have expected this to have been a short opportunity, but again, it was a MeBob, and this one would have been a profit. So we would have had 10 plus 10, so that's 20, minus 2 is 18, minus most of that 18, so you're at 0. Probably another down 28. If you would have taken this, you'd have been down. Wow, you'd have been down. And that's another thing. Do you really want to risk all the way back to the top of the MeBob? I'm not even going to count this. Similarly, I would not be counting this one here. At some point, when you're trading a mechanical method, you have got to give price action its due. So, let's just do it this way. I can't do all the math in my head now. So 1, 2, 3, 4, 5, 6, 7. I'm not going to count this one. 8. So that's 8 MeBob trades today. And because anything that happened over here was after 3 o'clock. This was actually in time, 14:40. So 8, and there were 1 win, 2 wins, 3 wins. So 4 wins, 4 losses. Would have been a negative day. probably, but if you were to, someone can figure this out if they want and post it in the forum. You're probably down a good 15 or 20 points by the time all is said and good. Again, I wouldn't count this one. And frankly, machine learning made a suggestion yesterday, I believe. I think it's a very good one, and that is if you have two back-to-back losing MeBob trades, that MeBob region is done for the day. It's retired. If you do any additional trading, don't do MeBob trading, because if we had limited it to the first two, yeah, we still would have ended the day down, but we would have been down maybe 8 points, right? But I would definitely stop after two. Another thing to consider is this. The ES typically goes into a trading range, or if it's going to go into a trading range, it's going to either do it at the open, and then it'll break out, or if it has big down, big up, if it's going to range, it's going to do it from about 12 noon. So 12 noon was here. It did continue into the MeBob, but that 12 to 1 is really sort of, it's lunch hour. Market wizards like Linda Raschke, at least in the past, when she was more active online, would say she doesn't take S&P entries from 12 noon till 1 o'clock. She'll trade from the open till about 11:30, and no, she's in a swing trade, she'll stay in the trade. But if she's taking scalps, she's probably not scalping from noon till about 1. Now, I don't know what she's doing now. I don't know if that changed over the years, but my own experience with the ES is probably best not to take setups that occur between 12 noon and 1 o'clock. And so if we did that, what would that look like? Let's start. So here's 12. Here's 1. So you would not have gotten long here. You would not have gotten short here. You would not have gotten long here. You still would have had this loss, followed by this win. Again, look, if this had closed up here, and it was 10, basically I'd be looking for support underneath a short, and this late in the day, I need 10 points between my entry and the next reasonable support. And there are computers out there programmed to identify one push, two push, it's going to buy the third push. One push, two push, it's going to short the third push. One push, two push, it's going to sell the third push. If you look at the, I put some screenshots up from Linda Raschke's Street Smarts book, which I think she wrote way back in the early to mid 90s. She's famous for saying you only need one pattern to make a living. And one of the things she said, she has several friends who do nothing but trade what she calls three little Indians. It's a wedge. One push, two push, three. So one little, two little, three little Indians go short. One little, two little, three little Indians go long. One little, two little, three little Indians, here's your short. And it's a pattern that repeats quite frequently. So I think that I am going forward, starting tomorrow. So this is now a setup. If you get a short or a long MeBob and the profit target is filled. Now you can't enter another trade on the same bar. There's one trade per bar. So for example, if this bar opened and this was the bar that our profit target was filled on and then traded up, I would not take that trade. One trade per bar. But since there was no trade on this bar, this becomes a new setup. This is the signal, this is the entry. Let's see, what else did I want to cover here? So, and my other rule is going to be, I am not going to take MeBob setups between 12 noon and So 1200 to 1300 Eastern time, I am not taking MeBob trades. I will happily trade anytime after MeBob up until noon. I will, if I'm available to trade after 1 o'clock, I will take MeBob trades after 1 o'clock. And just like yesterday, I am not taking MeBob trades where you're basically entering where you would really wish you were taking profits. If I'd gotten short up here, I'd be taking my profit down in here. I don't want to just be getting short. Same thing over here. If I could get short up here, perfect. I'm going to get 10 points down here because here's where my target's going to be. You have the nested wedge projecting a low to here. You have this candle here with its low and this here. So you sort of have this little area here where you might expect price to come back and test. Okay, so that's that. That's the MeBob. That's the MeBob review, strictly speaking. Did I do it? What did I do here? Okay, so this is the plain chart. So there's no MeBob region. Let's just talk price action. So price was a gap open. You have a little 2B. If you're brisk and brave, you don't even have to be that brave. You're at yesterday's high. Yesterday's high was 43 3/4. High here after the open was 45. Price closed below. You could sell at the market here. Put your stop loss here. This is a way where you can try to catch it for the gap fill. This candle here was the third 5-minute candle, so we're still less than 15 minutes in. Nothing's ever a sure thing. Anything can happen, especially in the age of Trump, where he could tweet or whatever it is he does, and the next thing you know, we're up 100 points, be down 100 points. But all things being equal, and if it were a normal day where he's not interfering with the course of history, when this closed down here, almost certain that price is going to fill the gap back to yesterday's settlement. Again, nothing is certain, and I'm not claiming at all that I'd be able to sell short here and put a limit order to take my profit here and hold through this, and then hold through this, and then hold through this. Okay, I'm not at all claiming that. I'm just saying, from a price action perspective, this is the candle that really doesn't predict, but forecasts, right? So like meteorologists, we the public say, well, when we hear them say they're making a forecast, we get upset when their forecast doesn't come to be. If they forecast 6 to 10 inches of snow, and instead we get, a heavy rain, or nothing at all, we say, geez, what good are they? Well, they would say, well, look, that was my forecast based on current conditions. It was not a prediction. Same thing with technical analysis and trading by price. The combination of the context of a 2B short sell up here, and if you don't know what a 2B is, Google Trader Vic, Victor Sperandeo, Sperandeo. He's the trader who coined the term, and very common. Again, I'm not claiming to have made any of this up. So this is the candle, however, that forecast that price was now, I would say, probably 60 to 70% more likely to fill the gap before trading back up above this high. Okay, so what else do we have here price action wise? So, bear bar. There's no reason to be buying anywhere here. Bear bar, bear doji, a bear doji but closing on its low. Even here, this first one, I think I mentioned in my live trade video, this would have been a short. Definitely would have been a short here if I weren't waiting for MeBob. Would have sold this close targeted the low of that doji. Would not have sold this one. It's identical, but sort of like machine learns. If you get 2 losses in a row, be done with the MeBob for the day. If you get 2 of these back to back, you want to wait. You don't want to just sell it at the market here. You'd want price to open, let it come make a low, rally up, sell stop below the low, that type of thing. Let's see. But first reversal attempt is probably going to fail. First, and this year it made a low. First reversal attempt failed. Made a lower low. This reversal attempt failed. Now we have an IOI. Do you see that? The candle that my cursor's on right now is the O. It's an outside candle. Now it's outside of the candle that followed, the subsequent candle. But its range is also outside of the range of the preceding candle. So the preceding candle is inside the range of this candle, and then this candle is also inside the range of this candle. IOI. Inside, outside, inside. According to Al Brooks, this is a setup, and it is a setup. I mean, I learned it from his material, but it's a setup. It's called breakout mode. Some people will call it a diamond, right? Because of this. Okay. But that to me overcomplicates it. There's no reason to draw any lines on it. It's an IOI breakout. I'm going to buy stop above the high of the second inside candle, sell stop below the low, and whichever way you go, you go. Again, I'm taking a 10-point profit target. In this case, I maybe would have taken a little more because I would have targeted the previous day's close. Actually, no, it would have been 10 points from the entry. But IOI, okay, we had the same thing. Where'd it go? Oh, right here. So this candle is inside of this candle, and then the subsequent candle is also inside of this candle. Sell stop below, buy stop above, target 10 points. Again, IOI. That is a price action setup. Starting next week, that will be a setup that I am going to be taking every single time. And if there's a conflicting signal between MeBob and the IOI, I will defer to the IOI. However, I do suspect that it may be the case. So for example here, because I was so focused on MeBob, I don't think I picked up on the IOI right away. Typically I see these from a mile away, because as soon as I see an outside bar, I know we have an IO, so I'm usually watching this next candle like a hawk. Does its range stay inside the outside? And if it does, I know I have an IOI and I got a trade set up. I need to put a sell stop to go short and a buy stop to go long. So this is a setup, a price action setup. This is a price action setup. So this actually should have tipped me off since we closed back below the MeBob. I should have just sold at the market, because I think that probably indicated that the most likely direction of the IOI break was a short. You live and you learn. And I gotta tell you, I'm learning a lot focusing on this MeBob setup. So back to price action. Bear bar closing on its low, but we're at the previous day's settlement. I'm not selling at the market. I'm not putting a sell stop below the low here. But now we have another bear bar closing near its low, and we're below the settlement. I'm going to put a sell stop at 83.50, profit target at 73.50. Would have gotten filled. Then price, strong bull bar up, but we're at settlement. And this is one of those times where I probably would have sold at the market somewhere. Probably when price retraced about half of this bull bar, I would have just hit a market order to go short. I don't want to be selling below this low, even though in this case, yes, you would have made your 10, almost 20-point profit if you managed it correctly. To me, now, okay, I would not have sold here, but extend this over, and this is what we're going to be doing going forward. Not this week, but probably starting next week slowly, and this is what we'll be working up to. So this is Monday's low, right? So price came down, and now we got a strong bear bar closing at or near its low below support. Now I'm going to either sell at the market, or if I'm more conservative, I'll put a sell stop one tick below at 68, take my profit at 58, low was 50 and a quarter. And now, I'll tell you, this would be a tough one here. So I wouldn't put a buy stop above this yet. In high with 64.75, 65. So what we potentially would have had here at this point is a little micro wedge. So I would have waited. I would not have bought until here. Price, because even here, price tried to break back above Monday's low, failed, came down, finally pushed through and closed above. So again, I'm either buying when this candle closes, or if I'm more conservative, I can put a buy stop one tick above the high, 81, buy at 81, target 91. And again, you guys can, if you have it in you, any of these, you can trail your buy stop above the high bars. You got short here, buy stop, and you would have taken your profit. That would have actually you would have a smaller profit, but at the same time, you get long here. Price looks like it took out the low there, right? Yeah, it did take you out. I don't know. I'm a big fan of taking 10. Depending on volatility, it could be a 4-point profit target, could be a 10-point profit target. Driven made a comment that 10 points is too small right now. Probably is. Market seems to be offering a lot more than 10 points pretty frequently. So maybe we should be targeting 12.5 points on the ES, or 15 points. I don't know yet. For now, I'm sticking with 10 points for the week. But, so again, you're looking for the market to prove itself. I wouldn't want to be, this looks like a buy signal. It's a signal bar. This is a signal bar. If I did take these, I would be taking my profit at this level. So if I had bought 65 and a quarter, my profit target would have been 71 and a quarter, 6 points. Still respectable. That's the $300 trade with just one contract. So buy here, market is now. We'll talk about the concept of always in, probably starting this weekend or no later than the following weekend. But so when this bar closed, the market was probably always in short, meaning that you're going to be ignoring initial reversal attempts. You're going to use these as opportunities to get short if you're not already, or get more short if you're the kind who's going to add. Now, I do add to winning positions, but it's more of a momentum play. So if I had gotten short here, I'm the kind of person who, and I have a 10-point profit target, where I have if I got short up here at 04, so I have almost a 15, actually more than 15, 17-point profit target. Price drops down, I might sell another here, and I'll just start hitting that market order. That's not over trading and that's not over leveraging because I have a buy stop that I'm going to continually be trailing down as I hit these orders. What I do not do is if I got long here and price drops, I don't buy another, and then I dig myself a grave. I'm piling into a winner. I do not add to my losers. So anyway, first buy here for me. This is another buy when you have matching tops, 95.75, 95.75, because more than likely, if it's going to reverse, it's going to leave either this 95.75, how should I say it? Either this candle's not even going to reach 95.75, or they're going to sell 95.75 and it's never going to get above. So this would be a place where I would get long, 10-point profit target. So 95.75, 05, 625 would have been a tough one. I probably would have gotten stopped out because this dive bomb down came up. But we have IOI, would have bought here. There's a profitable trade. This is a shooter. So MeBob or not, I get long here. The difference between how I would normally be managing a long position there is this. I would have taken my profit so we had this, and this. And then this bar closed, and this opened, and it traded up a little bit, came down, and it poked through this wedge line. I would have gotten out up here somewhere. I can't tell you the exact price, but no way would I have let this come back down like I did today. There's just no way. I mean, there's I have a little Discord room, me and 3 of my friends. They could tell you, there's no way under normal circumstances I'm letting this go all the way back to here. And this is 3 pushes, it's a wedge, and you could trade just that pattern. If you can watch the ES from open to close every day, you're going to get 1 to 3 setups based on this pattern. Sometimes there'll be micro wedges like this, or I don't know, really compressed micro wedges. So now this one broke up, but this could have, if this bar had poked up to here and closed down here as a bear bar, I can just about guarantee you it would have at least sold off down to test this low. But so anyway, wedge, this would have been a profitable short. I would have targeted a tick or so above this low. This probably would have caught me off guard, this real strong rally. This would have been a short target, this low. That would have been a profitable trade. Here we go. And again, this is another where I was saying, I think this was my last. Let's go to the MeBob chart. Yeah, so I got long here. Not long, short here rather. And this is what I'm talking about. To me, this is buy stop above this high. So even if I got short on a MeBob, there was no reason. Price action was screaming to stop being short at the very least, and preferably get long. This here was kind of a surprise because it looked like you had a mini wedge going. Again, this typically I would have been thinking the probabilities lean short. And then here you have an inside, you have a doji at the top. Some people will call that a spinning top. I don't really use those names. It's just a doji followed by a bear doji at the high, closed below the high, this most recent high. The next bar attempted to break up, also closed as a bear bar, also closed below this high. Now we got this bear bar closing at or near its low. Sell stop below. This is not discretionary. This is how I define the way I trade 5-minute bars on the ES. Now, also, I know I'm reading people talking about the NQ in the thread, and hey, you can trade anything you want. Just going to remind you that the NQ, the Russell 2000 futures, now they were known as the ER2 back then, not the RTY, but the YM, crude oil, all of these futures were available back then. And Robert Falk specified that the MeBob method is to be traded only on the S&P 500. So take it for what it's worth. I'm sticking to the ES for this. For the NQ, I think you're better off trading price action on 15-minute or 30-minute bars. Right now, I'm using the 30-minute bar. If volatility contracts, I could see going back to a 15-minute bar. You got to be willing to take on a lot more risk. I mean, the NQ can back up 50 points from an entry quicker than you can blink your eye. So if you can't handle $2,000 stop losses right now, you need to trade a micro. Maybe use $100 or $200 stop loss. But and I love the NQ, but I gotta say I really think that right now the ES is just a more favorable instrument to trade for me. But this is the defined setup. Now, someone would decide in their trading plan, I'm going to put a sell stop underneath the inside bar. And that's what they would do. Me, I would prefer to wait for a bear bar to close at or near its low, and then either sell the close or sell stop below. The risk to the way I do it is there are going to be times where you don't have this opportunity to enter because this 5-minute bar is going to trade all the way down to here. Brooks calls those bear surprise bars. So you can miss the opportunity by being too conservative. Again, everyone has to make their decision, but when you decide on your trading plan how you're going to treat this, whether you're going to put a sell stop below the low of an inside bar, or if you're going to wait for a bear bar or bull bar trading at or near its low, or conversely at or near its high, and then are you going to buy at the market, or are you going to put a buy stop above the bull bar and a sell stop below the bear bars? You got to decide these things. That's how you take the discretion out of price action trading. You define your setups. So down here, again, this is called a nested wedge. It's nested because the anchor is itself not a pullback from the high in the same way as the second and third pushes are. But again, this is Brooks calls, this is his terminology, not mine. Nested wedge. This is a wedge. This is a wedge. This is a nested wedge. So we get down here. Now, in this case, I would probably say I want to buy stop above the high of the inside bar because of this context. I would say if we get a continuation above the inside bar, then this low is going to hold. We're probably going to test this high. These are the trades where I can sometimes find myself able to hold for a swing. Because it just, after you have this third and you have two up here, this becomes almost a magnet for the market, almost irresistible. So, but that's a price action setup. At the same time, if someone said, no, I want to wait for I want to see a bull bar close at or near its high, so you could buy stop above this bar, or just buy the close. Just keep in mind that your stop loss is down here, at least initially. If you put a buy stop above, you get stopped in, and it closes up here, you can move your stop loss here. Here it came down, traded below here, now you have IO, but now you have a new bull bar closing at or near its high. Now your stop loss can go to break even. At the very least, it should be below here, could even be below this bar. Again, those are decisions you as an individual will need to make, but it should all be part of a written trading plan. So we're going to be adding these price action setups to MeBob, and you're going to have to examine how you feel when you're in a trade and compose your trading rules as you see fit. We're getting late in the day here. Here's the test. If I got long here, or here, or here, or here, or here, wherever I got long, I'm taking my profit target's going to be either 56.28, which was the high 5-minute close of this trading range. I might even shoot for 31.50, which is the high. It did get a little above that, but you never know that's going to happen. But we got there, bear bar. Not a great sell signal bar, but given context, if I wanted one more trade of the day, I would get short when this bar closed. And if I'm not short or long here, I'm doing nothing because I don't want to enter a new position after 3 o'clock Eastern. So that is the MeBob review. I hope you can see why I would add for myself, and I suggest it strongly for anyone following, don't trade between 12 noon Eastern and 1 p.m. Eastern, at least not MeBob setups. If you have a price action reason to take a trade, that's one thing. For example, this was a perfect short, in my opinion. If I weren't doing MeBob and I weren't making these videos and wasn't running the thread, and I were just trading on my own as usual, this would have been probably a 6 1/4 point profit. I like getting my stop to 6 1/4 points when I get close to a 10-point profit. So this got to 8. I probably would have moved my stop to 6 1/4. I would have sold short when this bar closed. Maybe a sell stop below would have taken my profit here. I mean, I can, and again, watch the video of the live trades, because I'm not saying anything now that I wasn't saying when the market was open and live. So this is not hindsight. And what I really want you to all understand is the reason I want to put MeBob and price action together into one trading plan is that just as MeBob is non-discretionary, 100% rule-based, so too is price action. Anyone who tells you that price action is discretionary hasn't done the work to define their setups. So even Linda Rashke, who's made far more money trading than probably everybody at Forex Factory put together during the course of her career, describes herself as a discretionary trader. And I just don't think that she is. Her setups are so well defined. The fact that she's not using squiggly line indicators on all of them doesn't make it not rule-based. Just because for example, when I said I'd wait for a candle to close, a bull candle close above this previous day's low, and then I would get long. There's nothing discretionary about that. If that's a setup, that's a setup, and I want to take it. What part of that is discretionary, I ask you? You have an IOI. You get an IOI, you're going to put a sell stop above the high of the second inside bar, a sell stop below the low. That's the setup. What's discretionary about that? Nothing. Wedges. You wait for a bear. Now, if this bar, let me relate this. If this bar had been here, so if this bar closed below this low, at or near its low, I would be short here. I wouldn't be waiting for this one because it's not discretionary. The way I define my setups means they are rule-based. And honestly, this is a rather recent realization on my part. You can go, if you've been reading my journal at all at Forex Factory, that's a different thread from the MeBob thread. I've been talking a lot for the last 5 or 6 months about my roulette epiphany, and part of that is I've realized that I wasn't playing as loosey-goosey as I sometimes feared I was. So that's what this journal is about. This thread, rather, the MeBob thread is about defining our terms, defining our setups, and being able to take our cues from important reference levels, the pivots, of course MeBob and the MeBob reference bar range, and price action. I think Blue Steel in the thread mentioned that he really likes Wyckoff. I don't know if it's Wyckoff or Wyckoff, I've heard it pronounced both ways, but his name is Richard D. I say Wyckoff. Wyckoff said that the market is constantly telling you, get long, get short, decrease your risk, move your stop. And it really is if you listen and observe in a focused way. Is it easy? No, it's like learning a new language. So for some of you, this is, like Spanish 101. For others of you, you've been through 4 years of language, and this is where you go to live in Spain for the summer to become fluent. We're all at a different stage, but that's okay. No matter what stage you're at, we can get you to the next one and get you to the next one. And the good news is, all you gotta do is watch these videos and read Forex Factory. You don't have to buy a course. No, having said that, no, and again, I'm not an affiliate. I really can't say enough good things about Al Brooks's video course. It's $399. I get that that's a lot of money for some of you, but it is I've spent money on courses, indicators. I've read literally hundreds, quite possibly over 1,000 trading books, certainly thousands of articles, magazine articles, internet articles. About the only thing I ever spent money on in terms of trading education that returned far more to me than what I paid for it is Al Brooks's video trading course. You take that course, the material in videos sections 8 and 9 alone will make your $399 back in a matter of days. But you don't need to do that, because I'm going to do everything I can to give everything you need here in this thread and through these videos. So stay focused and do the work, study your charts at the end of the night. I would suggest you do your own MeBob review first and then watch mine. And if you see that we're somewhere different, you know, maybe I made a mistake. Feel free to post at Forex Factory. Again, you can post here at YouTube. I will read and respond as appropriate to any comments here. But again, I am not trying to become some sort of trading influencer like those weirdos all over Twitter and YouTube. That's not me. This is helping me by taking this kind of approach to the material and speaking about it. And so there's some selfishness involved. But I'm hoping to help others as well. So that's it. Let's see what happens, and see if we can all start making a lot of money eventually by really honing our craft and focusing on the process of trading. All right, you guys have a great night. I'll be back tomorrow with another live trading video.